Welcome in, everybody. Get ready for another deep dive. And today, we're taking a close look at Virtu Financial. We've got their 2021 and 2023 annual reports lined up. Now, before you click away thinking annual reports, snooze fest. Mama, I promise you, these aren't your typical dry corporate documents. These reports tell a story about a company evolving right before our eyes.
Color me intrigued. I'm ready when you are.
So, Virtu Financial. They made their name in the fast-paced world of high-frequency trading, right? Algorithms battling it out for fractions of pennies, milliseconds, making all the difference. But these reports, they paint a picture of a company trying to break out of that mold, and that's what makes this deep dive so fascinating.
I'm all ears.
All right, let's rewind to 2021. The world's still grappling with the pandemic. There's global uncertainty swirling around. And what's Virtu's CEO hammering on about? Resilience. Not just weathering the storm, but actively supporting their employees through all the chaos. And speaking of employees, Virtu is really leaning into this whole people-first culture thing.
Yeah, I noticed that throughout the report. It seemed like a big focus for them.
Right. They were practically shouting from the rooftops about initiatives like Virtu talks on racial equality. Even brought in a Morgan Stanley exec for a fireside chat. I mean, can you imagine your competitor giving a pep talk to your own team?
It's a bold move, that's for sure. Shows they're not afraid to shake things up a little.
Totally. And that wasn't all. They also had this winternship program designed specifically to introduce female students to the world of finance. Seems like you're really trying to diversify their ranks.
Interesting. So it sounds like they're trying to cultivate a more inclusive and diverse work environment. But 2021 wasn't all rosy for high-frequency trading firms like Virtu, was it?
You hit the nail on the head. High-frequency trading was under some serious scrutiny. People were questioning its fairness, its impact on the markets. It was a hot topic, and Virtu knew they couldn't just sit on the sidelines.
Yeah, with the regulators breathing down their necks, they had to do something.
Exactly. They decided to jump right into the fray. They were pushing for more transparency and market structure reforms, pushing back against some of the criticisms being thrown their way.
I remember reading about that. They even went so far as to include a disclaimer about real price improvement, claiming that their trading actually benefits the everyday investor. A bold claim, to say the least.
That's the one. Okay, so back in 2021, regulators were really putting the pressure on high-frequency trading firms like Virtu. The big debate was whether these firms were tilting the playing field, giving themselves an unfair advantage over regular investors like you and me.
And this people-first culture push, it makes you wonder, right? Are they genuinely trying to create a more ethical, diverse workplace? Or is it a strategic move to soften their image in the face of all this criticism?
It's a good question. What do you think?
It could be a bit of both.
Yeah.
And there's nothing inherently wrong with that. If pushing this message helps them attract a wider range of talent and improve their corporate culture, then all the better.
True enough. But let's get back to that real price improvement disclaimer, because it's a pretty crucial part of their narrative here. They're essentially challenging the very way regulators assess their impact on the market.
It's a direct rebuttal. Virtu is saying, hold on a second, the numbers you're looking at don't tell the whole story. They argue that because they provide liquidity, they help make sure there are always buyers and sellers, and because they can often execute orders at slightly better prices than what you see publicly, that they're actually saving investors like you and me money.
So they're trying to position themselves as the good guys.
In a nutshell, yes. Whether that claim holds up under scrutiny is a different matter.
That's always up for debate.
It shows just how much Virtu was trying to control the narrative around high-frequency trading to prove their value to a skeptical audience.
Now let's jump ahead, right? On to their 2023 report. It's like stepping into a completely different world. The energy is different. Even their new tagline screams change. Growth from within. You see it everywhere.
Yeah, it practically jumps off the page at you. Bold move.
Right. And the CEO's message. Expansion, expansion, expansion. They're making moves into new markets, options, ETFs, even testing the waters with fixed income and digital assets. Plus, they're showering shareholders with dividends and buybacks. They're feeling themselves a little bit,
Well, they're not exactly known for being a shrinking violet, are they? But seriously, this kind of aggressive expansion tells you a lot about their mindset. They're not content just staying in their lane.
And remember all that talk about a people-first culture back in 2021? That hasn't gone anywhere. But they've tweaked the messaging a bit. Well, now it's all about everyone makes an impact. Think Silicon Valley startup meets Wall Street powerhouse.
Interesting. They're aiming for that sweet spot, right? The agility and innovation of a tech company, but with the stability and resources of a financial giant.
Exactly. Now get this, and this one surprised me. They've got a whole new section now dedicated entirely to, wait for it, sustainability.
Right.
We're talking environmentally friendly offices, reducing plastic usage, the whole 9 yards. Who would have thought high-frequency trading could come with a side of eco-consciousness?
It's a bit of a head scratcher, isn't it? I mean, it's not exactly the first thing that comes to mind when you think of a company like Virtu. But then again, maybe they're trying to signal a broader shift in their values, their commitment to something beyond just profit.
It's definitely a different tune than they were singing a couple of years ago. But it's a savvy move, right? I mean, sustainability is a big deal these days, especially for attracting younger, more socially conscious investors.
Absolutely. And let's not forget, these annual reports aren't just for investors. They're for employees, regulators, potential clients. They're a PR tool. And by showcasing these new areas of focus, Virtu is crafting a very specific image.
They want to be seen as a modern, forward-thinking company, not just some high-frequency trading machine.
Exactly. But here's the thing. Branching out into new asset classes, especially volatile ones like cryptocurrencies, that comes with its own set of risks. And to their credit, they're pretty upfront about that in the report. They lay out all these potential pitfalls, regulatory uncertainty, technological challenges, the whole shebang.
Oh, yeah, they don't shy away from that at all. And you know what else really jumped out at me? The whole cybersecurity thing. It's not just a passing mention in their 2023 report either. It gets a whole dedicated section.
Well, considering they've had that SEC investigation into their information barriers in the past.
Right. So this is serious business for them.
Absolutely. Cybersecurity is non-negotiable for a company like Virtu. They're dealing with incredibly sensitive data, executing trades at lightning speed. Any breach could be catastrophic, not just for them, but for the entire market.
It's like they're trying to reassure everyone, saying, we get it, cybersecurity is paramount, and we're on top of it.
Exactly. They're trying to project an image of control, of competence.
Speaking of control, we can't forget about everyone's favorite topic, executive compensation. Stock options, RSUs. We're talking some eye-popping figures here. What's the deal with that? How are they attracting and keeping top talent? And is there a downside to this kind of compensation structure?
Well, you got to think about it. They're competing for the best and the brightest in a cutthroat industry, right? So naturally, they've got to offer enticing packages, often heavily weighted towards stock-based incentives. The idea is to align the executives' interests with the company's performance, motivate them to grow the business, boost shareholder value, all that good stuff.
Sounds good in theory, but...
But there's always a flip side, isn't there? Too much emphasis on short-term stock performance, and it can incentivize risky behavior, It can create this pressure to hit those quarterly targets, even if it means cutting corners or making decisions that aren't in the best long-term interest of the company.
It's a delicate balance, for sure.
It is, and it's something investors should definitely keep an eye on.
Duly noted. Now, remember those tax receivable agreements we touched on earlier? They sounded complicated, maybe a little risky.
Oh, yes, those. Complex indeed, but let me try to break it down for you. Essentially, these agreements stem from Virtu's past acquisitions. They allowed the previous owners of those acquired companies to get a cut of the future tax benefits that Virtu generates. Think of it like a long-term payment plan for the deal.
So how does this impact Virtu going forward?
Well, these agreements represent a significant financial obligation for the company. These payments, they add up over time, and that could affect their profitability down the line, even limit their ability to invest in new opportunities. And you know what? If Virtu were to be sold or go through a major restructuring, these agreements could get messy really fast.
Something else to keep an eye on then. We've covered a lot of ground with Virtu Financial, haven't we? From navigating a crazy 2021 to chasing growth in 2023. But there's one more thing I want to touch on from that 2023 report, something that really stuck with me.
Okay, I'm listening.
They put a lot of emphasis on fostering a culture of compliance and strengthening their control environment.
Uh-huh.
I know. Sounds kind of like corporate jargon, right?
A bit, yeah.
But don't forget, these are the same folks who had those SEC inquiries we talked about earlier. So what's the deal with all this compliance talk?
It's damage control, but in a smart way. Instead of downplaying past issues, they're confronting them head on. By shining a spotlight on compliance, they're trying to rebuild trust with investors, with regulators, with everyone, really. It's like they're saying, we've learned our lesson and we're doing things by the book now.
Makes sense.
But it's not just about avoiding trouble, right? A strong control environment can be a real advantage. It helps them manage risks, operate more efficiently, make smarter decisions. It's like building a house on a solid foundation. It's all about long-term stability.
It makes you think, with all these changes branching out from high-frequency trading, going green, this whole compliance push, are they trying to reinvent themselves?
I think that's the million-dollar question, isn't it? They're definitely trying to project a new image to be seen as more than just a high-frequency trading firm. But will it be enough? Will it resonate with investors? Will it change how the whole industry is perceived? Only time will tell.
That's the thing about deep dives like this, right? We uncover the trends, we analyze the strategies, but we don't have a crystal ball.
Exactly.
Well, we've certainly dug deep today. We explored everything from real price improvement to tax receivable agreements. We saw how Virtu has adapted and evolved over a remarkably short period of time.
It's a fascinating case study.
It really is. So for all you listeners out there, what's the takeaway here? What can we learn from Virtu's story?
Virtu's journey gives us a glimpse into the future of finance, a future driven by technology, by adaptability, by the constant dance between risk and reward. These lessons are important, whether you're a seasoned investor or just starting to dip your toes in the market.
Absolutely. Virtue reminds us to look beyond the surface, to question assumptions, and to always stay curious. And that's what the deep dive is all about. Thanks for joining us on this journey. We'll be back soon to unpack more fascinating stories in the world of finance. Until then, keep those minds engaged.